Welcome back to Investing Talk Podcast. Today, we're tackling a question quite a few of you might be asking. Is Energy a good time to buy now? We've gathered some pretty comprehensive analysis on this uranium mining company, and we're going to break down everything you need to know. Before we jump into the details, though, if you find this kind of market analysis helpful, please do consider subscribing, liking, maybe leaving us a comment. Your support helps us immensely. Also, if there's a specific company you'd like us to look into next time, just let us know in the comments below. We really do love hearing from you. Okay, let's get into it. Energy. We're looking at a pretty detailed investment analysis today. It covers, well, pretty much everything from the fundamentals to the technicals, even what the analysts are saying.
Indeed. And our mission here, really, is to distill all that information. We want to give you a clear understanding of Energy's current standing and its future prospects as an investment. Hopefully you walk away with the key insights without feeling, overwhelmed by all the data.
Absolutely. So let's start with the basics, the fundamentals. What can we tell about Energy's fundamental health, especially when we look at its position in the industry?
Well, what's fascinating here is that while specific recent revenue or profit margin data wasn't explicitly provided in the source material we reviewed, the overall sentiment from analysts, and particularly the long-term forecasts, they suggest positive future earnings. This indicates a kind of underlying confidence in the company's fundamentals, even without those immediate numbers.
Okay, so analysts are seeing something positive down the road.
Exactly. And more importantly, you have to look at where Energy operates, the uranium mining sector. Now, if we connect this to the bigger picture, there's this rising global demand for nuclear energy. It's seen as a clean energy source, really driven by these big decarbonization efforts worldwide.
Right, the push for cleaner energy grids.
Precisely.
Yeah.
And this positions Energy in a critical niche. It gives it a competitive advantage, you could say, especially if, and this is key, uranium prices continue to climb or even just hold steady at higher levels.
So you're saying its industry position is actually a significant strength, maybe even outweighing some missing immediate financial figures. That is interesting. Okay, now on to valuation. Is your Energy currently trading at a fair price? Is there an opportunity here for value hunters?
Yeah, that's always the million-dollar question, isn't it? Is it a bargain? While, again, exact current PE or price-to-sales ratios weren't in our source data for a direct comparison, the analyst average price targets tell a story. They're sitting around $2.63.
Yeah, and the current prices.
$1.40. So that points to a potential upside of nearly 88%.
88%, wow.
Yeah, quite a gap. This strongly implies that the stock might be trading at a discount relative to its anticipated future value, at least according to these analysts. And remember, the uranium mining sector, it can be cyclical. It's often undervalued during periods when commodity prices are low. So this forecast suggests significant potential for appreciation if those predictions hold.
An 88% potential upside from current levels. That's definitely a compelling figure for investors looking for value plays.
All right, beyond the company's intrinsic value, what are the charts telling us? How does Energy look from a technical perspective?
Technically, Energy is showing some bullish signals right now. Its current price, that $1.40, it's above both its short-term 50-day moving average and its long-term 200-day moving average. Both of those averages are around 1.015 others.
And being above those is generally seen as positive.
Right, exactly. It indicates clear upward momentum, suggests underlying strength in the trend. Then there's the relative strength index, the RSI. It's near neutral, sitting at 49.7. Basically, this means it's neither overbought, suggesting it might pull back, nor oversold, suggesting it's maybe hit a bottom. There's room to move.
Okay, so not flashing any extreme signals there.
Right. Plus, it's seen 60% green days in the last 30 trading days, more up days than down days recently, which also suggests a positive trend. That's interesting. And you mentioned volatility earlier. It's a commodity stock often known for big swings. How does it look there?
The analysis puts its volatility at around 11.91%, which for this sector is actually quite manageable. It suggests there might be trading opportunities without, those absolutely extreme, unpredictable swings you sometimes see.
Good to know. So potentially less stomach churning than some others in the space. Okay, moving on. How are analysts and the broader market feeling about Energy right now? What's the word on the street?
Well, as we touched on with the price targets, the analyst consensus is actually a strong buy. We've seen multiple recent upgrades, and there are definite expectations for significant price appreciation over the next 12 months.
So the professional analysts are pretty bullish.
They are. However, it's worth adding a little context. The broader Fear and Greed Index, which measures overall market sentiment, it's currently at 39. That signals fear in the wider market. Some caution out there.
Okay. So general market jitters, but specific optimism for energy.
Exactly. Despite the broader market caution, the sentiment specifically for energy seems quite bullish. And that's apparently supported by positive social media engagement too, which is always interesting to see.
Yeah, that is an interesting contrast. A strong buy rating, even with market nerves, suggests analysts see something specific they like here. All right, let's talk catalysts and risks. What are the key events or trends that could really move energy stock? And what should investors be wary of?
Okay, potential catalysts. First and foremost, movements in uranium prices. These are heavily influenced by geopolitics, energy trends, supply issues. Also, policy support for nuclear energy. If governments double down on nuclear as part of their clean energy mix, that's a big plus.
Like new reactor announcements or subsidies?
Precisely. Then there are company-specific things. Updates on their operations, like progress at Lost Creek or Shirley Basin, production increases, those are key. And of course, upcoming earnings reports or any significant regulatory changes in the energy or nuclear sectors could also be catalysts, short or long term.
Okay, plenty of potential upside drivers. And on the flip side, the risks.
The primary risk, like any miner, is commodity price volatility. Our energy's earnings are directly tied to uranium prices. If they drop, profits get hit. It's that simple. The nuclear sector itself also has sensitivities. Regulatory changes, public perception shifts, safety concerns, those can impact things.
Right, nuclear power always carries that extra layer of public and regulatory scrutiny.
It does. And then there's competition, not just from other uranium miners, but from other energy sources altogether. Plus, you always have macroeconomic conditions. A global slowdown could dampen energy demand and prices.
So, a fair bit to watch on both sides. What does this all mean for someone actually thinking about putting money into energy? It sounds like significant potential, but definitely not risk-free.
Absolutely. Balancing act. Our overall analysis gives energy a rating of 7.5 out of 10. This reflects that favorable long-term growth potential we discussed and the positive near-term technicals. But it also acknowledges those inherent risks in the commodity and nuclear sectors. You can't ignore those.
Makes sense. And for those considering an entry point, any guidance there?
The analysis suggests looking at entry prices around the current levels, specifically maybe the $1.35 to $1.45 range. The idea is to try and capitalize on that potential upside we talked about while keeping an eye on managing the downside risk.
Okay, near current levels.
Yeah.
What about the time frame? Is this a quick trade or more of a long hold?
Based on the analysis, energy appears better suited for long-term investors. Those forecasts, especially the really long-term ones, suggesting potentially 400%, 500% upside by 2040 or 2050, those rely on a sustained favorable uranium market over many years. That's a patience game.
Right, so think decades, not days or weeks, for that kind of return. What about shorter-term traders?
Well, for short-term traders, yes, there are opportunities given the moderate volatility and the bullish technical signals we saw, but it requires very careful management. You have to watch for those sudden commodity price swings and shifts in market sentiment. Discipline is key.
Any specific trading guidance offered, like stop losses or targets?
Yeah, the analysis did provide some optional guidance. Suggests a stop loss maybe around 10% below entry, so roughly $1.20 to protect against a sharp drop. And for taking profit, perhaps look towards those analyst targets in the medium term, say $2.50 to $3, maybe within 12 months or so.
Got it. So some guardrails for shorter-term plays. Okay, so summing it all up, energy looks like a promising opportunity, especially if you have a long-term view. Strong sector positioning, attractive analyst price forecasts. But short-term traders need to be cautious and manage risk carefully.
That's a good summary. Know your own investment style and horizon.
And that pretty much wraps up our examination of energy stock. We've covered the fundamentals, the technicals, the risks, and the potential rewards.
And remember, looking beyond just this one stock, understanding that broader context, the global push for clean energy, nuclear's role is so important. It really raises a bigger question for all of us, doesn't it? How will increasing global energy demands and that drive for sustainability? How will all that shape the investment landscape for crucial resources like uranium in the decades ahead?
That's a great point. A lot to think about there. Well, thanks for joining us for this look at energy. We hope it's given you some valuable insights for your own investment decisions. We'll be back soon with another analysis. Until then, keep learning and stay informed.